Got that audio problem there. Always do that. Welcome to Friday. It is June 12th, and this is the pre-market update from Triggercharts, and we're going to go through a variety of different things. Obviously, seeing a major blow-off and a rotation down from what we had been seeing over the last week, taking back, what are we talking about? Almost 2 weeks of gains in that major rally that we saw that was pretty unprecedented, and a lot of people questioning what was it all about. And what we saw was, of course, the significant decline in the markets. I'm Andrew Horowitz. I'm the co-founder of Triggercharts, and this is the rundown for Friday, June 12th, as I mentioned. Before we go any further, I want to mention that this is for educational purposes only. It is not a recommendation to buy or sell any security. It is nothing more than some tools that you could utilize for trading decisions. And in fact, the Triggercharts indicators, the indicators that we utilize and that we have available on the Tradestation trading app store, are the #1 highest rated by a wide margin, and that should tell you something. Between that and the emails, because not everybody puts a review up, right? But between that and the emails that I get about people making money, thanking us for what we're doing, hopefully you are a subscriber. And of course, for all people that are new subscribers, a little bit of an incentive, if you will. Well, you can get a 4-hour, that's a 4-hour training course, a coaching session online. It's been there. It's kind of a real, I would say, stands the test of time. We did some great teaching some time ago. Have it available. It's usually $199, but anybody that subscribes to the Commander series over on Triggercharts, for Triggercharts over on the Tradestation trading app store, gets that for free. So taking advantage of that. Also, all the indicators we're talking about today are in fact available on a 10-day free trial. So where are we? Well, let's take a look very quickly before we begin talking about futures. We're up 559 on the YMs. Is also a very significant fair value calculation to the upside this morning as well. So we're seeing, for example, the ES at 198, but we're seeing that the SPY is currently trading at 2.22% higher in the pre-market. So about a 20-25 basis point upside opportunity there. Qs are lagging once again, which I find really interesting. They didn't fall as much yesterday, but there has been a little bit of a lag and then a couple of spurts where it's higher and rotates, and then we rotate the other way again. So there's a very strange rotation going on right now from value to growth, and growth to value. It goes both ways, right? And there's a lot of reasons for that. I mean, valuation, I think, is really important. When you look at the valuation of growth, you got to be like, wow, that's something, right? I mean, that you don't see that often. You look at the valuation of the value, the banks, the cruise lines, the airlines, the staples. Those are coming in, I would say, a little bit of a better valuation on where we are today. Looking forward, it's anyone's guess. I mean, the fact is that companies are pulling guidance, and that's creating a lot of uncertainty, unknowns, and really pretty much just throwing a dart to hopefully get somewhere in the vicinity of where these stocks are going to actually come out with regard to their earnings and their outlook, because we just don't know. In fact, one of the best things that companies can do right now, there's two things they can do. Have you watched what's going on right now? There's two things that companies can do right now that is really outstanding for their stock. One, pull their guidance. Go through the earnings, put up a good earnings for the first quarter, maybe pull a lot forward, and then just say, you know what, we're not issuing guidance right now. We're just not doing it. The second thing, you know what it is, right? Declare bankruptcy. Have you seen some of these bankrupt stocks? Whiting Petroleum, Chesapeake, JCPenney, Hertz. Unbelievable. Hertz is up 50% this morning. Why? Well, the bankrupt company, let me make clear that, the bankrupt company that they are, this is a company that in theory, if they go through the bankruptcy process, is going to wipe out the common shareholders. You own stock, when they go through this, and on the other side, you get zero, nothing. So the stock goes from, we can look at the chart in a minute, but from whatever it was, it's up like 400, 500% over a variety of days. Once they declare bankruptcy, everybody's a hero. This is wonderful. Carl Icahn's such an idiot. He should never got out of it. What they're doing today is they're issuing and talking about issuing $1 billion worth of shares. We have dilution going on, and we have a company, I don't even know if this has ever been done before, but a company that's going through bankruptcy issuing common shares. Now, I don't know either who the people are that are that brilliant that are going to say, you know what, this is going to bring in $1 billion to the company, and it's going to be unbelievable because now that's going to have staying power, and they're going to alleviate the entire bankruptcy process and therefore just cancel it. Or the stupidity of the people that are buying a company that is going to bankruptcy, that they can use those proceeds to pay off some of their bondholders and leave me holding the bag on the back end. Hertz has about a $500 or $600 million valuation right now, give or take a couple of bucks. I think the number is $19 billion of outstanding debt. You do the math. You do not have to be a financial analyst to do this. It's very simple. If you have a total net worth of $50,000 and you have $200 million worth of debt, how do you think that's going to look on the balance sheet? Are you going to be doing well? I don't think so. So there's something a little strange about the current market conditions. Well, one of the things that happened this week, I guess we'll call it a whoopsie-doo. The markets decided that, you know what, we're going to go up, and then just crash down hard. We had a downtrend day yesterday, move down. We have the speculative fever that's igniting and then exhausting. You see it from the chart on the right. I mean, this was clearly this little island right here. If you notice this, I'll draw a little circle on this. I think it's important. This island right here looks like an exhaustion blow-off top if I've ever seen one. You combine that with the KRI indicator, the key reversal indicator we talked about last week. Again, that does one thing. If you get it, you would have made a lot of money right now. It's cheap. I think it's 25 bucks a month. That's all it is. But it doesn't do a lot. It really doesn't do a lot. All it does track the heat of the market, whether it's in equilibrium, whether it's oversold or overbought. And really the only time you look to use these is when you get these significant signals of overbought or oversold. When they really get to the outliers, when they get to a -5, -6, and you start getting some, I'm gonna look at that chart in a second. But that's basically what it does. And there are times you can see that once it gets really hot, and if you have some staying power, you hold on, you get that short opportunity that works out really well. And then on top of that, when you have the opportunity to find those bottoms and then you combine it with the aileron and the Commander series, the autopilot, really very, very powerful signals. For all of you that are listening today, if you haven't yet, for whatever reason, you haven't gone and got the trial, at least the trial, and you're trading, I don't know what you're waiting for. This is by far what you see institutions using, and you could follow along with them right at your desktop. The $149 a month for the Commander series, to be honest with you, I'm going to pitch you a little bit here. If you don't make that up on a half a trade, not one trade, a half a trade, there's something that you're doing wrong. Now, of course, it takes a little while to understand what all the signals are and all. That's what we do on Fridays here, so we'll talk about that more. But the narrative has been changing. We're going from valuation questions to the virus questions to stimulus questions and back and forth and back and forth. We're happy about this vaccine. We're not happy that the vaccine doesn't work. We're excited about stimulus. We're not happy there's too much stimulus. We have valuations that are there, and then all of a sudden it's not good. So, I mean, you know, kind of weird stuff going on there. I'll mention over on the chat if you want to put in your stock symbols for me to look at today, whether it's future stocks, currencies, commodities, whatever it is, put it in there. We'll get to that today in a minute. Let's see what else we got here. Let's go over the KRI because I think it bears that we should really talk about this. And I want to kind of zoom out on this a little bit here. And I talked about this last week. I talked about this in videos. On a Monday discussion, I talked about it. Right now, we're back in equilibrium for the moment right now. We're probably going to get a push up a little bit higher today if the market does continue on the upside here. But we got something I've never, listen to me now, never have seen before. I've never, if you go back, and this goes back to 2010 when the various indicators that we utilize are in existence, I have never, ever seen a magenta +7 on the charts before. I've seen a lot of reds. You know, we get these little areas and we get reds and that moves, and, you know, just a little bitty ones that see reversals. But, you know, they climb and then you get a little bit of reversals on some of these downside. I've never seen, ever, a magenta with clusters. It was unquestionably a time of excess stimulation in there. So when you look at the overall levels that we are seeing with regard to this overall froth that was there, it was pretty evident, and it broke. Now, we can talk about all the other technicals that are out there and what's going on right now. I'm just talking about the speculation. When you get this kind of level, when we pinned out the chart right here at 7, right down here, right there, pinned out, and it closed on Monday at a +7. And that's when we saw the high in the market. So again, for 25 bucks a month, if you think about that, if you don't do anything with this and say, markets are going to do what they do what they do. They're going to go up, they're going to go down, they're going to consolidate. But then you got some times that, hey, man, you're getting some really good signals on the downside. And yeah, there was some false signals right here. One of the only ones I've seen because of the flush in a long time too. But generally speaking, when you start getting a multitude of dots, and then a reversal and a V up, man, that's a big signal, especially as you go over the zero line on the bottom where you had all this level of downside action for a while and all this level of oversold. So pretty cool. I think it was pretty cool. Worked out perfectly. Worked out perfectly. Yeah, somebody mentioned it works. Took a few positions based off last week and was up great in the green. Thanks from Nick. Thank you, Nick. Appreciate that. Let's see what else we got here. COVID. Fed overpromised. That was one of the big things also. They're talking about not raising rates until 2023. 23. Not kidding about that. 23. What that means is that we have a situation where the Fed is pretty worried. I mean, at first the markets spiked higher, right? Like, wow, hey, great. We got these rates that are going to stay low for like forever. This is great for valuations, free money, liquidity. This is awesome. And then markets are like, wait a second here. Why are we doing this till 23 when I thought the recovery was going to happen at the second half of 2020, maybe into the first quarter of 2021? But the Fed is going to be keeping rates down that long, and they're talking about the unemployment rate being substantially higher for this, and this is not really what we thought was going to happen. We heard from everybody else and how great things were and how things, don't worry about any of this, and it's going to pass over pretty quickly. And then on top of that, we got the increase in the COVID-19 cases in Florida and Arizona and South Carolina and Texas, and we're seeing the hospitalizations. More important than anything else, the hospitalizations are on the rise. I think in Arizona, they're calling for another state of emergency right now, preparedness for making sure that the hospitals are open and ready to go in the intensive care and emergency room facilities. So we have a situation where there is a lot of confusing cross currents going on right now. Don't worry about that, because we're just going to watch the charts and figure it all out. Just knowledge of what's going on is kind of important in the background. Now, let me just take a second. There's been a lot of discussion about some of these traders online talking about just buying the speculative stuff, the new narrative, stocks always go up. Stocks always go up until they don't. Stocks always go up from the March bottom until they don't. It's the same narrative on the other side. If we looked at the highs back in February and we say stocks always go down into March 23rd until they don't. The point is, don't fall for this stuff. This false prophecy about, we could just buy up this stock or that stock or buy up the Hertz or the Whiting Petroleum. It's just going to go up. And markets somehow are going to defy all the physics that are involved in markets and all the real things that happen inside of markets. You have to realize that's not necessarily what's going to happen here, and don't fall for this, okay? Don't fall for this. I'm going to show you a couple of stocks that you could have been really looking at like, oh man, I wish I got into those. Fact is, you could have probably gotten body slammed on a lot of these names because they go up so fast you can't get into them unless you're super lucky that you somehow magically got in on the bottom. But even getting out, there's no way you would have top ticked it unless you were unbelievably lucky in this game. So I'll talk about that in a second. We'll bring that up with plenty of time this morning. But the Fed did overpromise, and then everybody was saying, wait a minute, maybe it's a lot worse than we thought here. We did get what I think was a little bit much of a downstroke yesterday, one of the worst days of the market since March. It was due. Does it all have to happen in one day? And do we all need to see a recovery all in 1 or 2 days? I mean, right now we're looking at a third of the recovery. The Dow Jones was down, 1,800 points yesterday, looking for an open of about 650 points on the upside. Pretty good into a Friday. People still have that speculative fever. That speculative fever is not going away. As a matter of fact, I think it was even stoked even further by this big drop yesterday. Until we wash out some of that excess, markets will not function normally. So just to let you know that. Economics, initial claims remain elevated, about 2 million, about 1.8, I think it was this week. Inflation, headline inflation did kick up. So I don't know, maybe we'll see the potential for stagflation. And University of Michigan today at 10 a.m. Next week, we have retail sales, capacity utilization. We have business inventories. We have housing starts in the Philly Fed towards the end of the week. What else here? We're going to talk about Adobe, LULU. Those two came out with earnings overnight. Well, luckily, we can talk about it if we want. Jets, which is interesting. Talk about the various airlines if you want. Hertz, I got to show you this. I think it's really interesting. Fuel cell. And here's a couple of names here. JFIN and wins that really let's kind of go for that first. Let's kind of look at that first. I want to look at a couple here. So I want to look at this. Look at this chart. This chart is sidelined at $2.50 forever, right? Go back and look at this. This JFIN, whatever this is, Jalen. Point is, I want to bring up what kind of speculation you have here. Up 48% today, okay? Up 48% today. But I want to show you this. The stock goes from $2 and I don't know, call it $3. It launches, goes to $30. $30 in one day. Next day it turns around. Throughout the day it turns around, and you have it down to 11. And then we have it down right now at the next day it closed about 378, currently trading at 585. There was no way to catch this. I don't care where you were. This thing, yes, you could have possibly caught it when you finally saw it go to 12 or something. Maybe got out of 20, maybe, which is a great return, by the way. But these kinds of moves, unless you were on the absolute, you're tracking this, and I don't know how you would have found this because it was up and it opened up tremendously in the morning. Let's go to a 60-minute, see if we can see this. Yeah. So it opened up, it went from $2. It opened up at $11. It's quickly moved up to 20. Yeah, you could have caught that very quickly, but by the time you saw this settle out and when there was reason to believe that there was a little bit of, action that would slow down, and again, this thing was trading wildly, and then you fell down. So buy and hold on these kind of things are a major no-no. Look at HTZ. And let's look at this on this did climb. This was a little bit different. Again, ridiculous due to the fact that it's up 66% now this morning, okay? So Hertz closed to $2.06 at 342, issuing $1 billion worth of shares of bankrupt securities, and the stock is up 67%. But if you know what, if the narrative is that they're going to avoid bankruptcy, if that's what it is, that issuing these shares are going to be something that's very significant. What's going to happen is you have a situation where you're issuing these shares and it gives you $5 billion. And the hope is that there is the opportunity to actually have, the stock, stave off the bankruptcy. But again, this is kind of one of these things where people, I heard last week, which is right about here, hey, I bought the stock, and I said, what do you get at $3 or so? It went up to $6. It's 100% return. That's great. But then it came down. I mean, it was as low as $1.63 yesterday. Closed at 206. The other one that I want to look at is Wins. There's a few others, but same look. Now this stock is down 24%. It moved yesterday from 19. Look at this, 19 to 56. So it started out at about $6 a few days ago. Okay, it went to 65. It's a 10-bagger. That's unbelievable. Now, if you're a quick trader, you can get this, and yes, you would have seen that. But listen, the point I'm bringing up here, let's bring up the 30-minute, is there wasn't a lot of room on this, right? Even our systems, because of this way that this trades, I mean, it's just not a lot of opportunity, it doesn't look like, in my opinion, to really get anything that's too good here. So, I don't know. Let's go to some color in here. I mean, the wild volatility in this until you get there. I mean, I think the only thing you could have done was possibly a 5-minute chart. Yeah, 5-minute charts probably would have played here. I don't really recommend these all the time, but for these kind of moves, I mean, if you could have picked it up, you would have picked it up here, I guess, at about, it's moving so fast, even this thing looks odd. Picked it up at about 27, got out at about, right about here, 35, got back in at 39, got out somewhere over here at about 39. I mean, it's just too wonky. And then it closed yesterday on the downstroke here. Again, I don't really recommend these on these short time frames. It doesn't make any sense to me. Here we go. Somebody's trying to beat me on my phone. I don't know why it's. There we go. Okay, sorry. Just want to make sure all that's right. All right, let's go through the rest of the stocks. I think there's some really cool ones in here. Let's go back to a normal time frame that we can kind of look at, both daily and weekly. Adobe is trading up 5.5%. Numbers missed a little bit. Guidance was questionable, but they had some reasonable numbers that weren't too surprising. And there's, the way that they're shaping these discussions right now. What I think is really interesting about this, we came right back into exactly on the close yesterday, 387 or so, right on our level of support. See that red line that kind of crosses right through there? So that was a sign. I mean, Adobe's been spiking up, doing really well. If you look at the aileron on the bottom, I mean, there's no question about this, right? On the aileron on the bottom, if you kind of look, you can see that there's been a tremendous uptrend obviously for some period of time. Really didn't even have, I mean, it did go down from 387 down to 300. That was a pretty ugly situation. Did spike down even to a point about 275, 270. But when you look at the chart here, I think that we did see a lot of strength in this, and it's been a really nice run from every base that you want to look at. I think, in fact, if we look at even longer, which I like to look at sometimes, I mean, this has been in the long-term weekly uptrend since 424. So, you know, you got this kind of levels on the downside. You got these things that have happened here, but this level on the move on the upside really has been pretty solid on a weekly basis as well as on a daily basis. So I like to look at the longer time frames. In fact, what I like to look at is up here, right? I can see the same thing up here. When I look at Adobe right here across, I can see this long for 8 bars. Got short yesterday on the short term, but I look from right to left, always looking from right to left. I think it's really important to recognize this is a big part of this whole strategy, is this right to left move. The look, you want to do the same thing on your charts, always looking from right to left. And the reason for that is it gives you the historical look at where the levels are, where there are holes, fast zones, vertical moves that move quickly through time, or horizontal moves that consolidate through time. It's really important, and write this down, put it on your desk, put a sticky note right on your screen. Look left, look left, look left. It's kind of like when you're making a turn in a car, you know, you got to make a left turn, you got to make a look both ways. Yeah, I want you to look both ways in this circumstance, but I really want you to look left. Always look left. It's really important on this whole process here, and it's part of the learning and the teaching that we do on a regular basis when it comes to this. So when we look left here, when we get off of the levels that we had, right? You know, this level right here, I mean, that was the all-time high. We did see it spike a little bit higher, come back in, but again, trading well above it today, up 5.25% on, I would say, you know, okay earnings, nothing smashing. It wasn't as good as I would think for an all-time high, to be honest with you, but there you go. Then we got Lulu trading down only 1%. Is that right? Wow. That was down like 9% earlier. This is Lulu. They came out with earnings. They missed by a wide margin. This stock was set up for perfection. Do you see it? Do you see how it was set up for perfection? We called this long back on, what's the date here? 5/14 at about 2:30. You're currently sitting on 321. If you even paid a little bit of attention to this, you would have been sitting there saying, that was pretty easy. So Lululemon, when you look at the stock, I mean, it's been in this incredible uptrend. Yes, there was a concern about what's going to happen. People aren't going to be buying things from 137. You got a couple of different opportunities. You got this great short from 201 down to about 143. Got a couple of little falsies here, but a little bit of a nice move from 198 all the way up to about the orange 212, and then a couple of falsies again, and then just a takeoff. So this has been a real winner. And if you look at the aileron on the bottom, also confirming that. So I'm pretty surprised it's only down 1%, considering all the things that are going on there. Jets is it's up 10.19%, which means that in the background, you have other stocks that are doing much better, like American Airlines doing much better. Delta Airlines probably up very nicely. Alaska Airlines probably up pretty big. JetBlue, yeah, UAL, they're all up big today. They're all trying to recapture some of those losses from yesterday. But this is the ETF that tracks the airlines, and you can see that the markets are still going up into the open here, really trying to slam it higher. People are just like, I got to get in. Oh, it's down. I got to get in. Buy the dip. You know, and this is a problem that we've been having right now with the market, and where you're going to see the excess volatility that's going to kick in dramatically. You know, the thought that stocks always go up, this is that narrative we talked about, and the thought that the Fed has our back, they are, well, they're not smart. I agree that stocks go up over long periods of time. I agree the Fed has our back to a degree, but that is not the only things that you want to look at and just speculatively throw things in. What you're seeing a lot of times right now is people not even paying attention to anything about anything and anything. They don't even know what a stock does. And in technical analysis, you don't really have to know what a stock does, but you have to at least know about, okay, what's the float on this? What's the short, what's the short holdings on this? You know, where are we with this stock kind of historically, what's going on? Not just because it's going up today. That's the difference. Know what's happened historically. Know where your points of support are, where your points of resistance are. Know where that's going to lead you into where I should buy the stock and where I should exit the stock. There's a question somebody asked, where do I find your indicators at Tradestation? Let me pull up a quick link for you and put it into the, right there. There you go. Yep, free money evaporating. Yeah, the fact is the Fed is slowing down their purchases. That is a good point. But again, you know, you're talking about 3% day, just trying to get back at any will. That, my God, I got to get in. I missed out 2 days ago. Stock market's down. I got to get in today. All right, there's some theory there. I mean, right now we're looking at small caps probably up pretty substantially. 4% today. I think they dropped about 7% yesterday. Look at that big drop. And they were in a bit of a downtrend or starting to roll a little bit anyway. We saw the aileron. Look at this. You can see it. Aileron started backing off. It got peaked out, you know, right about here, and then it started rolling down. So you had a 4-day warning on this. Not like it was a surprise. And now you got to a negative 44, one of the most oversold levels we've seen back to be honest with you, right here. We're still not oversold by these by a long shot, but, you know, this is what's driving the market right now. I mentioned Hertz. Where are we now? 68%. Fuel cell energy, another one of these that just blew the top off for whatever reason. This one was a little bit more interesting because it did have some logic to it. We saw that there was some substantial amount of aileron that held up for a while. Another cheap stock, but once we got off of this point and blow off, and then you look from right to left, it did blow off top above the other high that we saw, that island from 2020. Starbucks. Yesterday had a very bad day closing, or the stores, same-store sales were horrible. You know, right now we're at 3% in the pre-market. You're below this level. That's a really important level, $74 and I guess about 50. Right now, you're right at that level. I would think there's going to be some real good resistance right about in this range here. Yeah, right in this range. A lot of resistance, and then you're going to have to see some real work being done to bring it back up. But this incredible consolidation, look at this. You know, if I could draw this, let's see if I could draw this here. You know, this incredible consolidation that we're seeing here. You have to wonder if you're going to see a little bit more of a downstroke into this, into the area, maybe up to this level, and then below here you have a real problem. So there's your $60 as your kind of target if it does in fact collapse. You start seeing a little bit of collapsing here, a little bit of a drawdown. You see that drawdown or that rotation down on that? That is important. All right, let's get to a couple more of your stocks. What do we have here? Somebody asked me about GM. GM's up 7% today. Okay, that's good. Trying to get back a little bit here. It's been a nice little uptrend here. Slight rolling of the aileron, the momentum indicator here. This is a separate indicator from the Commander Series. Commander Series is this radar screen up top, and all the charts you're seeing here, with the exception of the aileron. We have probably levels, I don't know. I mean, down at 2294 is probably your questionable support resistance area. 27 and change. You're above this. That's pretty good. 2830. So you're right on this level right here. If we were to kind of draw it in and look at that, that is an important level. Car sales coming back a little bit. I think used car sales are going to trump all of this due to the fact it's going to be a flood on the market. Somebody asked me about, I think, Weight Watchers. That was in here somewhere. Yeah. Weight Watchers. Weight Watchers up 4.5% today at 24 and change. I thought that I like Weight Watchers. I think there's a little bit of a different thing going on here. We are seeing a little bit of a slowing down of the momentum, which is a concern of mine. But this big consolidation that we're seeing here is going to resolve. It's going to resolve one way or another, right? It's going to resolve down. It's going to resolve up. So, you know, we got this big consolidation zone right here. I think that the trend for people staying home due to coronavirus, and a little play on this kind of idea that maybe there's going to be a lot of people that have gained a lot of weight and want to use an app. Because Weight Watchers is a great app right now. A great opportunity to the new normal of how, in fact, people utilize different services. So, you know, I thought there was a really also a great level of support down at 22 range. So, you know, kind of picking it up somewhere around this range here, I thought was a reasonable thing. It did try to pop up and then stay in this consolidation zone. So I think we're going to be in this consolidation zone for a little while. I'd look to pick it up when we see a little bit of a drop down into this level. And, you know, see if we can kind of play it up to about 27, 28 and see if it comes back up. Longer term, again, this is kind of the same look as we just saw, but in a more exaggerated fashion. Just kind of move up, down, and move up. We're going to run out of time this morning. Thank you for joining me. Be here next Friday, and we will talk about all your stocks, all your things. Let's see what happens on the open. I would expect it to kind of ramp up a little bit and then come back midday a little bit and then kind of peacefully end the day on a nice note. So markets are open now. Have a great day. Have a successful day. And I'll see you again next week.